Generally, a taxpayer cannot file as married filing jointly if either spouse was a non-resident alien at any time during the tax year. However, non-resident aliens married to U.S. citizens or residents can choose to be treated as U.S. residents and file joint returns. If a taxpayer is a married non-resident alien, but their spouse is not a U.S. citizen or resident, they must use the tax table column or the tax rate schedule for married filing separate returns. Filing as head of household is not an option for non-resident aliens. For taxpayers who are not employees or self-employed individuals receiving wages subject to U.S. income tax withholding, the filing deadline is the 15th day of the 6th month after the tax year ends, typically June 15th for calendar year filers. If unable to file by the due date, taxpayers should submit Form 4868, the application for automatic extension of time to file U.S. individual income tax return by the regular due date. This grants an automatic extension, but timely filing is crucial to claim deductions or credits. To benefit from allowable deductions or credits, taxpayers must file a true and accurate income tax return within 16 months of the due date. The Internal Revenue Service, IRS, may deny deductions and credits on returns filed beyond this period. It's essential to ensure all information is correct and submitted on time to avoid losing potential tax benefits. This timely filing requirement underscores the importance of staying organized and aware of tax obligations throughout the year. Before leaving the United States, most aliens must obtain a certificate of compliance, commonly known as a sailing or departure permit, from the IRS. This is secured by filing Form 1040-C or Form 2063. Even after departure, an annual U.S. income tax return is required. If married, each spouse must file separately unless one is a U.S. citizen or resident alien, allowing for a joint return. Compliance with these requirements ensures a smooth transition when leaving the U.S. To claim a federal tax refund for a deceased taxpayer, Form 1310, Statement of Person claiming refund due a deceased taxpayer must be filed. Typically, this is done by a surviving spouse or the executor of the estate. If not a surviving spouse filing jointly or a personal representative with court certification, Form 1310 is necessary. Executors filing a full return on behalf of the deceased must include Form 1040 and possibly Form 1041 if the estate generates over $600 annually. Under the Tax Cuts and Jobs Act, personal exemptions are suspended from 2018 to 2026. For 2023, taxpayers cannot claim personal exemption deductions for themselves, spouses, or dependents. Filing requirements depend on gross income exceeding the standard deduction. For married taxpayers, combined gross income must surpass the standard deduction for a joint return, provided certain conditions are met. These changes highlight the importance of understanding current tax laws and their impact on filing obligations. A dependent is defined as a qualifying child or relative. Taxpayers cannot claim dependents if they or their spouse could be claimed by another taxpayer. Dependents must be U.S. citizens, residents, nationals, or residents of Canada or Mexico, with exceptions for certain adopted children. A qualifying child must meet relationship, age, residency, support, and joint return tests. Understanding these criteria is crucial for accurately claiming dependents and ensuring compliance with tax regulations. To be a qualifying child, the individual must be related to the taxpayer, meet age and residency requirements, and not provide more than half of their own support. A qualifying relative must not be a qualifying child of any taxpayer, meet specific relationship criteria, have a gross income below $4,700, and receive more than half of their support from the taxpayer. These tests ensure that only eligible individuals are claimed as dependents, maintaining the integrity of tax filings. Even with a qualifying child or relative, 3 tests must be met to claim them as dependents: the dependent taxpayer test, joint return test, and citizen or resident test. Taxpayers cannot claim dependents if they themselves can be claimed by another. A married person filing a joint return generally cannot be claimed unless the return is solely for a refund. Exceptions exist for certain adopted children. Understanding these nuances is vital for accurate and compliant tax filings.